Insights on the U.S. economy. I spoke to Dean Baker, co-founder of the Center for Economic and Policy Research, and I asked him about the second quarter GDP expansion.
Well, the revision actually was fairly modest. I mean, it's rare you get a second report that's identical to the first report. So originally we're looking at 4%, 4.2. It's basically the same story. So obviously it's the direction you want to see it, but it's not a huge change. And again, to look at the number, 4.2% looks like pretty good growth, but we had minus 2.1% in the first quarter. So if you take those two numbers together, you're looking at a growth rate of just over 1% for the first half of this year. So that's not particularly strong. So again, you can't look at 4.2% in isolation. You have to remember the first quarter, it's a bounce back from a really bad quarter.
There are signs in this second reading that we'll see a stronger second half with business spending and consumption. Do you think that the worst of the year is behind us?
Well, absolutely. I mean, the second half will be better. The first half, clearly weather was a very big factor in the first quarter. Also, part of it was an anomaly with the inventories. Inventories were a big drag on growth in the first quarter, big spur to growth in the second quarter. So that's behind us. We'll see better growth. But it's still not really going to be very strong. I mean, most estimates, mine too, would probably be around 3%, a little less for the second half of the year. Most people were expecting 3% as a year-round average. So if we get, let's say, 3% in the second half of the year, take a year-round average, you're looking at 2% growth. That's not particularly strong. That's basically the economy's potential, maybe not even that, which again means we're making up none of the ground from the recession.
There are so many things happening globally right now. The situation in Gaza, Iraq, Syria, also the crisis between Ukraine and Russia. How are those issues impacting the U.S. economy? How will they impact the U.S. economy?
Well, I think the direct effect is fairly small. I mean, you look at these, there's a lot of horrible stories out there, a lot of people dying, and it's a pretty bad picture, so I don't mean to minimize that. But if you just go, okay, but how does this affect the U.S. economy? For the most part, these are countries that we don't have a lot of trade with. So I think the direct impact is very small. If you ended up with something that took a lot of oil off the world markets, you could see an effect. We haven't seen that really to any big extent yet today. Probably the biggest effect would be if the situation in Ukraine with Russia flares up more, and that would really be an indirect effect. If that had a big impact on the European economy, we would feel that some. The U.S. directly doesn't have that much trade with Ukraine or Russia, but indirectly, of course, if that affects Europe, that will affect us.
Now on to U.S. jobs. Jobless claims slipped for a second week, and job growth has topped 200,000 for the past several months. Do you think the jobs market has turned a corner?
Well, we've definitely seen better growth this year. We had 5 straight months of 200,000 plus growth, which was the first time in this recovery. People forget that's not that great, but that's certainly better than what we had been seeing. So it definitely has been going in the right direction. I'm not confident that we will continue to see growth at that pace because it is somewhat of an anomaly. You would expect if we're having 200,000 plus job growth, you'd expect that would be consistent with an economy growing 3, even 4%. I know we had that for the second quarter, but no one thinks we're going to sustain that. So that's somewhat of an anomaly. I worry that job growth will slow. In terms of the jobless claims, those are relatively low numbers. We're a little under 300,000. That's very good. Those are pre-recession levels. But there's an important part of that story that I think people miss. A lot of people no longer qualify for unemployment insurance. A lot of the people who are losing their jobs are people who've been unemployed. They get a job, then they're the first person laid off. So those people aren't going to qualify for benefits. So I think that's one of the factors that's keeping claims down.
Are consumers more confident now than they were 6 or even 8 months ago?
I think there's some, the component of that, there's always 2 components of the consumer confidence index. One is the current conditions, the other is the future expectations. Current conditions index is up a little bit, not very much. The expectations is the one that looks better. That's saying people are hearing good things about the economy, but really it's the current conditions. If people buy a car or buy a house, that's current conditions that matters, and that's up, but just not very much.